Welcome to this week's Forex forecast for the week ending April 28th, 2023. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the DXY, the euro, the pound, the dollar versus the Canadian dollar, and also gold. Now, before we get started, if at any time in this video you find it helpful, be sure to subscribe to the channel and also like the video, guys. It does help me out a lot, and I appreciate it in advance. And if you have not signed up with my partner, Prime XBT, where you can trade Forex, crypto, commodities, and indices, be sure to see the description of this YouTube video, or if you're on the website, click on that free access link and you'll see the link there to Prime XBT. Now, when you deposit $500 or more, I will give you lifetime access to our Discord group, where I'm very active every day, helping everyone with their trading, posting charts, posting trade ideas, and also sharing my trades in real time. All right, so with that said, let's go ahead and take a look here at the DXY, the US dollar index, which last week didn't really give us a whole lot of indication as far as where this market is going. However, what I will say is the last video I made, I was talking about this Friday move here. And what we can see is that this is very similar to what we got back in January and February. Okay, we had the low here at 101.50. We got the lower low, the reclaim, and then the rally. Okay, in this case, we've had these two lows so far, but we're just waiting to see where this is going to go, the resolution here between these two key areas around 101.50 and also this trend line. All right, so the one thing we did get last week is that Monday, push higher to really confirm that Friday move we saw. But so far, obviously, the DXY has really gone nowhere here. Now, I do think, though, next week, it is going to be kind of squeezed between these two levels here at 101.50, also that trend line. So this is going to be a critical moment for the dollar. Can it break out from this trend line and head higher up here toward the 102.60 monthly open, or do we get acceptance back below 101.50, right, for that move back here toward the year-to-date low? So that's what I'm watching here for the DXY. Again, no real resolution to this right now. I am cautiously bullish, though, on the DXY while it's above that 101.50 area. Okay, if we start to lose this, then I will change my stance on that. But for now, as long as 101.50 holds, I do like the dollar higher. However, as I've told members now for really weeks, we do need to see a higher high here from the DXY. We have not gotten a higher high ever since early March. Okay, since that time, it has been a series of lower highs for the DXY. So we need to see that change in order for the dollar to break higher. So next up, we have the EURUSD, which, like the DXY last week, didn't really tell us a whole lot. Before we get to kind of the smaller time frame stuff, I want to talk about this channel that I mentioned before, and I think that this is kind of where the bigger opportunity comes in from the euro if we do see the dollar break higher. Okay, still a big if, but if we were to see that happen, this channel right here is the one I'm going to be watching because I do think that an eventual break below this support, again, this hinges on the dollar moving higher. If we get that and the euro rotates lower, okay, and breaks this level, then I think we're looking at a larger rotation lower for the euro. Now, with that said, okay, we don't have any confirmation just yet. So right now, this market is just very sideways. However, I will say that it is still holding below 110.30. So I think you have to be careful while below 110.30, simply because this was the previous year-to-date high. We've also got that multi-decade trend line that I've mentioned that intersects right up here in this area. Okay, so this right here was a failure as of now. We got the confirmation with the close here, confirmation again with Monday's close. So right now, I'm just waiting to see if the market can break below this trend line off of this low. I mentioned this last week. Right now, it is holding. We saw Friday dip below it and then recover. So short term for the euro, I think it gets really simple. If we were to see bulls reclaim 110.30, so move up here, reclaim this area, right? Acceptance back above 110.30, back in this range, then I think we're headed higher, which I'll get into next week if we were to see that. Okay, that's still a big if. If we were to see the euro break this trend line, though, and get back below 109.30, then we're looking at the bottom of that channel. And as I said, break that, I think we're looking at lower levels like the 107.50 area. All right, so next up we have the pound here, which, to be honest with you, went from being a really clean trading market to just a complete mess up here at the range highs. So we had this range in place for several months where you can see the range highs back here right around like 1.245 or so. And then we've got the range lows. We had the bullish deviation down here. So we got the close below, the reclaim, and then the rally. All right, so that was beautiful down there. And then we had something that looked very similar up here where we got the bearish deviation slash fake out and the reclaim, below it, the acceptance below it. However, the market then just shot higher, took out this high, and since that time, it has been very sideways. All right, so, to me, this is something that I try to stay away from, where there's really no clear indication as to where this is going. The same thing with the euro, really. But what you can see is if we look here at the daily time frame, this is the trend line I mentioned last week. And what you'll notice is that even though we really haven't had acceptance, below this area, at the same time, the market is just kind of holding below that. All right, so I think what this is going to come down to is, do we see acceptance back above this range, okay, for the market to just continue ranging here? Or do we finally get below these lows, right? If we do that, we're looking at 122.90 and potentially that mid-range around 122. Acceptance back above here, though, we're looking at the range highs, all right, right up here. And above that, then we're looking at higher levels for the pound, which, again, I'll get into that next week if we do see it. But right now, this is just a very range-bound market. You can really see it if you go into the 4-hour time frame, just how range-bound it's been. Again, that's our trend line right there, which you can see so far is holding up as resistance nicely. But as of right now, this is really just a range-bound market here between these two levels. Now, going from markets that aren't really showing us a whole lot to something that is trading absolutely beautifully. And this is the dollar CAD, guys. This is something I mentioned last week, and I've talked about before for actually several months. This range that goes all the way back here to 2015. All right, so you can see that we've got the range highs up here. And again, this right here is actually the 2-week chart. So you can see range lows down here. Now the market's coming off the low, and you can see what's happened over the past decade or so, right? We've gotten the market just kind of gyrating between these two areas. And so right now with the market coming off this low, we've got the uptrend intact. To me, I'm only looking for long opportunities as long as this area down here holds. And I talked about this about a week ago, where I mentioned that there could be an incredible long opportunity if 133.50 holds. And sure enough, if we go down here to the daily time frame, right, this is our key level. This is our key level that goes back to July of 2021. And then we've got that October trend line. So I've talked about this before as well. We got the slight dip below it. Okay, so this was a bullish deviation. This was a fake out, where you can see that the dollar CAD had actually closed below this. All right, so this right here was an ideal setup. We got the close below, resistance right here, close back above, held above it. Okay, and this is what I talked about a week ago. And you can see, since that time, the dollar CAD is up about 150 pips. Now, what I wrote about on Friday is the fact that the market really hinged on this monthly open at 135.16. And the idea here was that if we got a daily and weekly close above it, then we could be looking at 136.50 or so next week and potentially higher. And sure enough, we got the close above this on Friday. So this flips to support. You can see where it tried to reclaim back here, but failed. And now we have that reclaim. Okay. So, we could see a little bit lower, but as long as the market holds above it on a daily closing basis, I do like it back here toward 136.50. Now, obviously a daily close back below it would invalidate this because it would make this a fake out and we could get that move lower. All right. But ultimately, if you look at this on the weekly time frame, right, what we have here is a triangle pattern that has developed within that channel. Okay. So up here from the high, you've got these two highs. And by the way, this was the high right after COVID. Okay. So this is essentially your COVID high. And then we've got the low down here. We've got this trend line off of July 2021. Okay. So this is our support level. And you can see that we do have a triangle that's developed. All right. So again, within that broader range. So if over the coming days, we get acceptance above, let's say that 135.16 holds as support, we get the move up toward 136.50, that breaks, then we're looking at the 138 area. All right. So we're essentially just looking at something like this within this triangle. Now, if this were to break out in the coming weeks, then we are looking at that larger move potentially all the way back here toward the range highs. And that would be a massive move here for the dollar CAD. Of course, you've also got highs like this to pay attention to as well. But essentially something like this, where we get the breakout from this level, that would be a huge moment for this pair. Now, obviously this could go the other way too, where we get the move up here, the rotation lower, and then it just breaks down, in which case we're looking at lower levels for this pair. All right. But really, to me, this is going to be your range for the next few weeks. So when we look at this on the daily, you can see that this is our trend line down here. We've got the range lows set and the range highs up there around 138. Okay, so next up we have gold here, XAU. And last week I mentioned that this looked relatively bearish, right? Because we have this trend line off of these highs. And I don't typically like playing, fake outs like this or deviations from a diagonal level. However, this does seem to be playing out so far. Okay, so we had the deviation above this. That was a failed breakout. And what you can see now is gold did close the week below that 1990 level. Now, it was relatively close. I would have liked to have seen something more convincing down here at the lows, but it does appear to have broken that support level at 1990. So what this means is that this up here, okay, this up here was our deviation, and now this up here potentially becomes our deviation. In other words, if 1990 holds this week as a resistance, we could get that move down here toward the 1920 area. All right, so I'm relatively bearish on gold. As long as it's below 1990, acceptance back above that invalidates the idea, but as long as this holds as resistance, I do like this market lower down here toward the 1920 area. All right, so that's it for today's video. I hope it helped. If it did, like the video, subscribe to the channel, and be sure to sign up with my partner PrimeXBT, where you can get up to a $7,000 bonus, deposit $500 or more, and get lifetime access to our Discord group, where I share trade setups and also my trades in real time. Hope you guys have a great weekend. I will talk to you again next week.